Good morning to those of you that are on the webinar. My name is Shannon. I'm with Nedbank. We're very happy to be hosting this morning. I wonder if maybe one of you could maybe just pop a note into the chat box, just letting me know whether or not you can hear me at this particular point in time. It would be useful just before I get started. Great, thanks Renee. I'm assuming you can hear me. Thank you very much. Wonderful, thank you, Megan. Great. Okay, folks, it looks like there's about 7 of us on the line. We were expecting a couple more. It is 11 o'clock, so I think just to be respectful to your time, we will get started. I do myself have a hard stop at 11:30. The intention is that I talk you through some of the presentation, maybe for 15 or 20 minutes, and allow another sort of 5 to 10 minutes just for some questions that you guys may have. If I just reflect on what we want to talk to you about this morning, it's really just to sort of hope, well, I guess the intention is to sort of try and put you as a small business entrepreneur into sort of the shoes of a banker for a moment, just so that when it comes to you approaching or looking to get the best out of your banking relationship, you have a good sense as to what it is, as an entrepreneur to be preparing in order to make sure you leverage the best out of that banking relationship. So it's about putting your best financial foot forward to potential funders, and of course, as Nedbank, we'd love to be able to have the opportunity to engage you to the extent that you feel we could be the bank for you, if that's not already the case. So I think some of the questions that we will be seeking to answer that have been sort of flagged through to us is sort of having taken a bit of a knock and trying to get through the crisis. How do you get bankers or investors to believe in you? So we'll put our best effort forward in trying to help you with the response to that. What are bankers looking for in a business? And again, we'll seek to be answering that question too, and then also give you a sense as to what some of the red flags are for us as bankers when we're engaging with businesses, small or otherwise. So that's, I guess, will give you some sense of the agenda we'll be looking to follow during this morning's conversation. So I think the first thing maybe to point out here is, with any relationship in life, first impressions do count for a lot. And perhaps just some pointers around the sort of first impressions that you create with your banker is, first up, be prepared. And prepared from a banking perspective means that you have your ducks in a row, your house from a business perspective is in order, and that you have the documentation or the information available that ultimately your bank is going to be seeking from you. The other thing to do is to be sure that you know what you want and what it's going to achieve for you, and to be able to demonstrate that. And maybe, when people come to banks for funding, there's different types of funding, and we'll talk about those a little bit later. But I guess here, you've got to be clear around what you want the funding to do for you. So if, for instance, the funding is to help you acquire a piece of machinery that's going to help you automate your business processes, then help us understand how that machinery is going to work for you. In other words, what's going to cost you, what it's going to cost you to produce goods, what are you going to be selling those goods for, what would it otherwise have cost you had you not had the machine available, and that's going to help us as a bank understand what you're seeking to achieve. And in the context of a piece of machinery, it would be potentially increased automation, lower costs, and ultimately a higher gross profit for your business. So it is an important element for you guys to understand, and it is relative to any type of finance that you'll be looking to achieve. It could be working capital finance. You again once again need to be able to demonstrate what it's going to do for you. It may be financing a commercial property, and the same would hold true. I think the other thing is that we as bankers is facts and figures, and not I thinks. And so when asked a question, or specifically it's referred to the last point, is when we as bankers ask you the questions around what will this piece of machinery achieve for you, the moment you open up with an I think, it suggests that perhaps the research is not being done to give us the sort of clear answers. We really like facts and figures. And I think the other thing is open up to us. It may sound a little cliche to say that as banks, we want to be your partner. There is, in fact, a lot of truth in that. I think the more we understand, which most partnerships have the benefit of having, the more we have knowledge around your business and what we could be unlocking through this partnership for you, the better position we're going to be in to be able to help you down the line. I think the other thing, and it's not your problem, of course. It's what we have to contend with as a banking industry. We're highly regulated. We are conservative risk takers, and there's a reason for that. The conservatism around our risk is mainly a function of the margins that we operate in. So when we lend money to you, let's say hypothetically at prime, there's generally speaking about a 2 to 2.5% margin in that for us. And within that margin, we need to obviously contend with bad debts, people not paying us back, our operating costs, and we still have to turn out a bit of a profit for our shareholders. So the nature of our industry is such that we need to be conservative. To the extent that we write off too much money, then we start eroding the capital within our business, and no shareholder wants that. The regulation is there to make sure we protect, or that consumers and businesses are protected. That's the real reason behind why this regulation exists. One of the key regulations we're regulated by is the National Credit Act. It specifically applies to very small businesses as well as consumers, and it makes sure that we as banks don't lend recklessly. Another thing that you can do to help sort of create a great first impression is just come to the bank with a good credit history. And I'm sure we're aware of this, but the bureaus in the background are collecting credit information on you on a continual basis. We rely on that information ourselves, just to take stock with the sort of people that we're engaging with and what their credit history is. So I think just when you're approaching your bank, these are perhaps just some tips for you around how to go about doing that. And I think don't tiptoe around what it is you need. Be very clear. And I think the more exact you can be around what you require, the better. Do your homework and make sure that, again, that which you're asking for is going to be that which is going to, in fact, assist your business. It can happen in our environment. In fact, we see it on a daily basis, that people may come to us asking for 500,000 Rand, let's say, in an overdraft to help them with their working capital needs. We say, well, we can't come in at that type of level. We could potentially offer you, call it 250,000 Rand, and I'm talking in hypotheticals, and people say, well, let me have that because that will do. Well, the question we would then ask is, well, how can that lesser amount do if you understood what was actually required in the first place? So I think do your homework, make sure you're ultra clear on what's being required. In terms of projections, because often you'll have a bank requesting you to provide them with cash flow projections. And listen, as entrepreneurs, we're typically optimistic by nature. And I think all we're asking you to do when it comes to setting up your cash flow projections is be as realistic as you possibly can. The other thing is try and make sure you've got your paperwork in order. We'll talk about some of that paperwork in a little bit and what it involves. And pretty much any commercial bank will be asking you for that information. And in the absence of that information, it makes it very difficult for the bank to reach a decision on the specific request that you have. So then, just talking about the process of applying for finance. First up, your bank is in the best position to help you understand what the best funding option is going to be for your business, be it a short, medium, or long-term funding requirement. So I think the best way of going and applying for finance and saying, listen, this is your need. You need funding to buy stock, to bridge your creditor payments. They will then advise you as to the best product that's going to serve that. And in that environment, or in that particular example, more often than not, it would be an overdraft or a debtor financing type of mechanism. The second point here is around how you go about preparing and pitching for your bank. So we know we are your service provider, and so typically it's not your service providers you're pitching to your own customers. But in this case, the big appeal is sort of put your best foot forward and prepare for your bank conversation as if you were preparing for the big sales contract that you're chasing. And when you're doing that, you're generally going to be sort of positioning every reason why people should be signing on for your particular product. And I think the same would be true here. Help us understand why we should be signing on and providing you with the funding to enable you to sort of grow your business to the extent that you have the ambition to do so. Then when it comes to the record keeping, and we said we would talk about the records in a little bit, specifically the records that we're talking about here are your financial statements. So let me just also position at this particular point in time that as commercial banks, we're not the best avenue to go to if it's startup funding that you're looking for. We'll talk about some of the alternate funding mechanisms in a little bit. Where we play a strong role as commercial banks is helping you step change the growth of your business and providing you with funding against an established track record where you've already been able to demonstrate that you can run a business and do so profitably. When we see that, it puts us in a stronger position to provide the funding to help you sort of stimulate the growth of your business. So when we talk about financial statements, essentially any length of record would do, from as little as 6 months and beyond. We also don't need audited financial statements. That requirement has left some time ago, but we do require your annual financial statements. Annual financial statements are generally signed off by an independent accountant, and that independence is important to us because it gives us a sort of third-party, trained eye view on the financial records of your business, and based on that, we're happy to sort of take the numbers for what they say they are and base our credit decisions on those. That being said, we believe that every entrepreneur should be keeping a set of management accounts where they should be updating them every month. So if your financial year end finishes, let's say, on the 29th of February, then we would expect you at the end of March to have a set of management accounts that you're using as management to determine the performance of your own business within a month thereafter. We will typically, as a bank, only request those management accounts if your financial statements themselves are older than 6 months old. And management accounts don't need to be signed off by an independent accountant. They simply need to be generated within the business itself and give us an account as to how the business has been performing since the date of the last financial statements as drawn up by your independent accountant. The third financial record, which is often important for us, is, and if you're a retailer, you typically won't have this, but if you are any other business that's not a retailer, typically you'll have people that owe you money for services or goods or products provided, and all we request is to see an age analysis of those debtors. Now, the reason this is important for us, because we'd like to see the quality of your customers and the quality of the debts that they have owing to you. It also helps us understand what sort of disciplines you've got in your business for collecting the money that's due to you. So ideally, a good position is to see quite a lot of your clients owing you in the current column, many more potentially owing you within the 30-day column. The moment we start seeing a disproportionately large amount of your debtors sitting in the 90 days plus column, then it sends a signal that as a business, you're not particularly good at collecting your debts, unless, of course, you're giving your customers 90-day terms. But that, I think, is few and far between these days. I think 30-day terms are, generally speaking, the norm. Then we spoke a little bit earlier on cash flow forecasts, so we don't need to go into that too deeply. Again, the emphasis there needs to be on remaining conservative. As bankers, what we like seeing is positive cash flow. And positive cash flow needs to be distinguished from positive cash balances. Positive cash balances, if you've got those, then typically you don't need the banks for your short-term working capital requirements. But positive cash flow is simply an illustration of the money going out and the money coming in. And as long as we can see that the money coming in exceeds the money going out, then that's a demonstration of positive cash flow. And that's what we're happy to be the funder of. And then I think mainly for small businesses, there's often a requirement for us to see your personal position statement, which is simply speaking a statement of your personal assets and liabilities. And the reason this is important is because many small businesses are capitalized by shareholders or business owners through a mechanism called a loan account. And for those of you on the line that have got a loan account, you will know what I'm talking about. But that loan account is essentially money that is due to you as the business owner, having invested that personal money into your business. And so as a bank, we see that as capital. But we only see that as capital if we go ahead and go through a process of signing your personal surety in favor of your business obligations. If you were to refuse the bank that personal surety, then we cannot deem it as capital. We have to see it as debt. And so when your bank often asks you to provide personal surety, it is generally speaking going to be for that reason, because you will have lent money into the business. And in order for us to see that as capital in the business, we can only do so if we link that capital via your personal surety for the obligations that your business runs on behalf of the business. So that's a little bit on applying for finance. And by the way, there is every opportunity you guys have got just to sort of ask questions throughout this process. And once I've gone through this, we will go through that and answer some of those questions as best we possibly can. I see there's already a couple coming through, so get to those in a second. Then just in terms of the three key finance options provided typically by commercial banks. I've spoken about sort of short-term funding, which is typically there to provide funding for the working capital cycle. So any business has a working capital cycle. It's a time typically between when you get an order, when that order is processed, either through a manufacturing cycle into an end good, and when that order is ultimately delivered upon to its customer, and when the funds are ultimately collected. That entire process is the working capital cycle. And often, specifically in businesses where there's a high level of growth taking place within a business, it is very difficult to fund those orders from the start of the cycle to the end of the cycle on your own, specifically given that the start to the end of the cycle can take up to as much as 6 months. And so short-term funding is there to provide that. An overdraft is the typical mechanism. Factoring, invoice discounting, cash advances, these are all products we offer as commercial banks, and all products that you can apply to Nedbank for. Typical duration of short-term funding is 12 months or up to 12 months, and the facilities are generally reviewed on an annual basis so that they continue for as long as they're required. Medium-term funding is typically funding which is there to fund assets which have a medium-term life. Medium-term funding typically is funding between 1 and 6 years. It's a great, it comes in various guises. It comes in the form of asset finance, in particular, finance motor vehicles, your office automation, the production facilities within your businesses. Long-term funding is there, generally speaking, to fund property, be it of a commercial, industrial, or, of course, on a residential basis. So those are the three funding mechanisms typically provided at commercial banks. And within each of those three categories, there's a whole subset of products which are there to design to do specific things over those periods of time. Just in terms of some of the alternative funding mechanisms, so as I mentioned a little bit earlier on, as commercial banks, I'm not sure that I know that we're not as geared as what people would like to be able to provide startup funding for businesses. The risks associated with starting up a new venture are such that it almost becomes prohibitive for us as commercial banks to be providing startup funding unless we have some really strong collateral to keep us covered. And that's a function of what I mentioned a little earlier on around the very thin margins that we as banks operate on. And so if the new business failure rate is such that 70 or 80% of businesses fail in the first 2 or 3 years, and we were to provide funding to all those businesses, well, then there simply wouldn't be a banking system left. So startup is not an area where we have particularly strong. That said, there's obviously other avenues that one can seek down. Family and friends. I think more recently, crowdfunding has started to gain traction. For those of you that sort of follow events on Simply Biz, you will have seen that there was an initiative a couple of months back where we were working with Thunder Fund, which is a crowdfunding initiative. Crowdfunding is simply the ability to raise funding from people that know, understand your business and are prepared to put their own funding into your business, and in return you provide them with a service at a future point in time. So hairdresser is a great example, and this was happening throughout COVID-19. The hairdressing market was closed. Crowdfunders became a mechanism for those hairdressers to keep their doors open, and people would donate funds into the business venture so that these things could remain afloat, with the expectation that they would receive a treatment at the hair salon once the doors reopened again. So crowdfunding has been gaining some traction and has got a very good and particular place in the funding market. Private investors, typically through venture capitalists and angel funding. Now, venture capitalists is an interesting thing because venture capitalists are typically interested in transactions that are sort of greater than 10 million rand, and they will scrutinize and stare down your business case very hard. They'll need to find something very distinguishable in your value proposition, and if they feel the prospects are strong enough, they will invest in your business. Their exit strategy is to sell the equity that they will insist upon when they provide you with the funding up front. They essentially become a part owner of your business and are not there for the long term. And it typically, given the fact that they want a piece of your business, becomes quite an expensive form of funding. And like I said, they're quite choosy about the sort of investments that they embark upon. So not for everybody. And then, of course, there's the government agencies, CIFA and the IDC, and they obviously play an important role in the funding society as well. I think just a quick Nedbank punt, the sort of particular areas that we focus our attention on is obviously in making sure that we provide our clients with the sort of day-to-day transactional banking capability, the ability to disperse funds, the ability to receive funds, point-of-sale machines. I think we've got a very strong position in the card acquiring and point-of-sale market. Our role is obviously to also make sure we provide you with investment solutions that are going to cater adequately for your business's needs. Funding, we've spoken a bit about, obviously a key part of what we do as banks. Your banks will also provide you with insurance and risk management solutions. And of course, in the Nedbank space, there's certain beyond banking initiatives which we push quite hard. We're talking through one of them at the moment being Simply Biz. There will be more coming down the line in the form of Money Tracker. For any small business, I would really urge you to go onto the nedbank.co.za site, locate the essential guide for small business owners. It's an easy and very manageable read, but I think it'll tell you everything you need to know from how to set yourself up and make sure you remain compliant with the tax authorities, to registering a business, to maintaining a good relationship with your bank. It's a great property, and you can download it for free in PDF off nedbank.co.za, and I think simplybiz.co.za as well. So there's quite a lot we're doing on the beyond side of things. You can also obviously register a business through our portal and simultaneously open up a new account whilst you undergo that business registration process. These are just some of the transactional propositions which we are providing to the market at the moment. The one in the top left-hand side of your screen being the startup bundle is there really to provide startup businesses with a bit of a leg up during the early stages of their business operations. It provides essentially free banking for up to 6 months. And so thereafter, you can sort of elect to slot into a different proposition. But really they're just to sort of help give businesses a bit of a leg up while they kick off. And that's it from the formal presentation perspective. I think there's a couple of questions that have come through. So let me just try and start at the top and navigate my way to those questions. Bear with me 1 second while I'm trying to toggle through the screen. Okay, so there's a question from Renee. Renee says, my cash flow has been affected by lockdown. Should I ask for an increase in my overdraft facility for a few months to cover my costs, or should I apply for a loan? So I guess, so Renee, typically the bank's approach to relief efforts as a consequence of COVID-19 and the lockdown has been exhaust your own resources first. So if you do have access to an overdraft facility or you do have access to investments, in fact, when one reflects on the COVID-19 SME loan scheme, it almost insists that you have used, that we as a bank are able to demonstrate that you have used your own resources before you apply for the COVID-19 SME loan. That being the case, you would absolutely be entitled to apply for a loan under the COVID-19 SME loan scheme. That essentially can provide you with funding for up to 6 months of your operating costs. And it gives you quite flexible terms in terms of when you start paying back. So your first payment can take place after 12 months of having been awarded their loan. And similarly, you get another 5 years thereafter to pay back the loan. It is going to depend on your individual circumstances. I'll happily give you my email address. Then this goes out to any of you guys on the line. It's a small group that wants a little bit more insight. My email address is alans, that's with 1 L, ALANS, at nedbank.co.za if you want to speak about your circumstances in particular. But the general rule of thumb is use your own resources. When you feel you're getting close to the point where your own resources are not going to continue to sustain your business, apply for the COVID-19 SME loan, and you need to do that through your main transactional bank. So if Nedbank is your main transactional bank, you approach your small business services manager and they'll facilitate the process for you. Then there's also a question around how do I build a credit history when I'm over 50 and self-employed and have no debt. So you may be surprised. You may have a credit history already because your Vodacom or MTN profile is being captured by the bureaus, and that's telling us something about you. If you have any clothing accounts or a Woolworths account that you use to buy your groceries, those will all pull through as part of your credit history. So you may in fact have a credit history. If you don't have a credit history, it won't be held against you. It is typically speaking that when you have a credit history that demonstrates either judgments, late paying, or some form of other adverse report, that it will count against you. But no credit record or credit bureau report will not mean negative things for you. It just means that you don't have a credit history. But I'd be surprised if you've lived in South Africa all your working life and you have paid bills and debit orders. I think you probably do have a credit history, albeit that you haven't necessarily borrowed formally through their banking market. Then Monique asks a question: would the bank accept a budget that is being tracked on an Excel spreadsheet? You're too small for a bookkeeper or an accountant. Absolutely, we would. So it really doesn't matter on what forum or what format your cash flow projections are made. The big thing is just helping us understand whether the cash flow forecasts or your budgets are realistic or not. And typically, we would use a bit of history to determine that's the case. So if last year your annual sales turnover was 1 million rand, and you're projecting that it's going to be 5 million this year, we would probably be a little dubious and circumspect unless there was a very compelling reason why you were going to have 500% growth from one year to the next. And there may well be. It may be a big contract that you've landed. But I think that sort of talks to the previous point we made around be transparent, open up to your bank about your business, and make sure we understand as much about you as we possibly could to make sure we make a informed choice. Then I think Renee also made the point around don't have any credit. No. So hopefully, Renee, I've answered your question as I have answered Janet, and that gives you some sense as to how a credit bureau or how the credit bureau having no history will affect your chances for further loan. It won't. The big thing is obviously just making sure that you don't have a negative history. Okay, I'm not sure. That was the only questions that I had received. I'm not sure if there are any others that anybody would like to ask. We've got a couple of minutes left. Okay, that being the case, just want to thank you for joining me. And again, my email address is alans@nedbank.co.za. So if there are any other insights you'd like to have, please feel free to drop me a note. And by the way, I should have done this right up front. My role is I'm the executive for client engagement and sales within Nedbank's small business and professional banking division. So feel free to reach out and we'll help you as best we possibly can. Thank you.